What's up, y'all? I'm wait a few more minutes, let a few more people get on here. Y'all can see my screen. Gold, Bitcoin, put US 30. What else? Nas 100. Oh yeah, AUD, USD. All right, bet. I'm gonna start with AUD, USD. It's the Australian dollar versus the US dollar. And fairly simple. After I'm finished, write down any questions you have. Ask the questions once I'm finished. All right, bet. All right, so the first thing I do is go to the daily chart, and you want to identify the trend. So are we in the bullish or bearish market? Is the market moving up or down? Or is it consolidating, moving sideways? So you can see right here, we in the bullish market. Get our parallel channels, trap price. And then right here, we'll drop down to the 4-hour chart and identify our key levels, support and resistance. This is literally all you got to do. Very simple. You got to use no indicators, nothing. It's just very simple. Zone to zone trading. And then where the peak set is going to show you where reversal pattern is at. So when I put it in regular candlesticks, you're going to see what I mean. And then you just mark off where price becomes support and resistance all the way down. Then you're going to see how this going to help you when we drop down one more level. See, I slept on this line chart, but it definitely simplified things real quick. And then you can just do this every Sunday if you want, or you can just do it one time, and you can see how this one markup gonna last. You can use it for a couple of weeks. And it's your roadmap to any chart. So you're not blindly going into the market. So we marking this chart up now an hour before the market open up. So we already have a sense of direction of what to look for in the market. And then I got some information I'm gonna drop in the group chat about what pairs trade best on what days. And as you see, I'm just dropping a line area where I see price become support. I mean resistance right here and support right there. And you notice how price is ping pong in this area, meaning price is respecting this zone. Look at this zone right here, same thing. Support right here, resistance right there. I mean resistance up here, support down here. Like trading is not hard. The hardest part about it is controlling your own emotions and being patient and not being greedy. I made a post on my Instagram and Facebook not too long ago about how trading correlate to the 7 sins. I see I can even put another one right here. All right, so now I'm done with that. So now I'm gonna drop down to the 1 hour. And put my regular candlesticks. So now I know from the, so I'm gonna go back over one more time. So now I know from the daily, I know that, okay, overall, we're in a bullish market, right? Price is going up overall. And we know that to be true from right here. Then you know wicks tell stories. So you seeing this day right here, that wick right there lets you know that this big move was happening. And you know we on the daily time frame. So the higher the time frame, the stronger the move is. That's why it's good to start your markup from the daily and above. You have swing traders who start their markup from the monthly. Like they trade from the monthly on down. All right, so like I was saying, daily, boom, we're in the bullish market. All right. 4 hour, we dropped down to the 4 hour. We identified our key levels of support and resistance. And as you can see, look at the line chart. See what I was saying about those peaks right there. Then watch, I switch to the candlesticks. You see how now you see how price wick in these areas. These wicks are signs of rejection. So it lets you know. Let me zoom in some. I say wicks tell stories. So let's go back a little bit. Let's just pay attention to this area right here. Hold on. Let me zoom out right quick. Let's just pay attention to this area right here. Now this is what happened. So we're gonna cut off all this right here. Come on now. All right, fuck that. So just act like none of this right here exists. So what happened was, you can see price had made a bullish move up. It hit resistance. It hit a resistance level up here. Let me zoom out. All right, price made a bullish move up here, and then you notice in each zone. So we're gonna start from right here. Let's start from this bottom. You see it move up, move up. It broke it, came back, retested it. That's where you would have entered your trade at, on that retest. Always remember this: break, retest, trade. Break, retest, trade, unless you have a super engulfing candle, but we'll get into that later. But like say, for example, this candle right here. Damn, I ain't even do that. Like say this candle right here. You might have missed this move up here, but you see, boom, that wick right there. So the buyers had the market. So that means the buyers pushed the price up to this peak right there, and then the sellers took over on this candle and pushed it down. And then you see on this candle, so the start of this candle, the buyers came in, they pushed it back up, boom, but the sellers pushed it right back down. Same thing. The buyers pushed it up here, the sellers took it over. But you see, say if you would have entered on this move, depending on where you caught it at. But say if I would have caught, and these are 4-hour candles. So say 2 hours into this candle, you seen this move. After seeing that up there, I would have definitely entered this and rolled it all the way down there. But back to what I was saying over here. So you see after that, price made a bullish move up. But in every zone, you see it respecting it. Boom. Like you would have entered wick, take profit. And you can enter your take profit and stop loss into each zone. That's how you can just easily scout the market. And that's why you can just hold this markup. So another example right here. Boom. Boom, but it went all the way up here. Then it reached this resistance level up here. So price failed to break this point. So you can see right here, it went up, got pushed down. That wick right there is a strong reversal sign. Then the next one right here, this is how you definitely know it's time to enter the sell. On that second one, it went up again, could not break this zone. So then what happened? Came down, retested this zone. This is where we would have entered the market on one of these two candles right here. Especially once we seen it come down, break it, come back up. This one right here, break it. We would have entered right here on this candle. And then boom, you could have easily take profit right there. Let's see how many pips that would have been. Where was that? Oh yeah, from right here. Just from that zone right there, easy 26 pips. Easy 26 pips. Then you know about the lot sizes of 0.01, 10 cent, $0.101, a standard, $10. I'm gonna put my stop loss about right there above. If I enter, well, it's not directly perfect, but I would enter a little bit right lower than there, but you put your stop loss a little bit above market structure. It's gonna keep highlighting every time I go over it. But you put you see where that line at, or that dotted line at, you would have put your stop loss a little bit over market structure. And you want to always make sure that you have a little bit over a 1-to-1 ratio, but no lower than a 1-to-1 ratio with your risk versus your reward. Because there's make no sense of entering a trade and your stop loss or you risking more than you gaining. Like it's no sense you entering a trade and your stop loss is way up here at 46 pips, but you only gaining 26 pips. Like you see how that's a 0.57. Like that's not a good trade. But we drop back down to the hour chart, and I can delete that. But yeah, you see how price respecting these zones, like I was saying right here, you said this price that came up, tested, could not break it, came back down to the next zone, came back up, could not break this zone for nothing. Boom, boom, boom. Came back up. It just could not break this zone. And then that's when it just fell. It went to hell after that. After this last one right here, boom, it went to hell. And you see that strong engulfing candle. And an engulfing candle is a candle that's bigger than the previous candle before it. So let me erase this blue box. So look at this right here. You should have this red candle engulfing, or basically look at it like you can fit this candle inside this candle. It just takes over that candle. That's an engulfing candle. That's a strong reversal sign right there. If it was vice versa, if the red candle, the red candle is a sell, green is a buy. So it would have been the other way around. If the green candle would have been smaller, if the green candle would have been bigger than the red one, that would have been signs of a sell, of a buy. Let me find an example of that right quick. All right, boom, right here. Right here. You see the same thing. Look, see how so it was a bullish, a bearish move right here. Price went down, 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 came right here. So then it started in the sell. But then you see how price respected this support level. It touched that line, rejected. This is engulfing over this candle. That's a nice little buy move. Let me see how many pips that would have been real quick. $78 pips. And we only looking for 20 pips at a time. 20 pips at a time. We just want to start there. So let's say all we would have needed out this move was that right there. That's all we would have needed. That little move could have caught that rejection. Boom. 20 pips easy. So then we drop down to the 1 hour. So that's an example of engulfing candles. I hope you're taking notes, writing it down. I know I'm kind of running through it fast. And then you just drop down to the smaller time frames to look for your entry. It just depends on what type of trader you are to what time frame you want to enter. So right now at current position, I'm gonna put a, and it's recorded, so I'm gonna keep this with the team. All right, so right now in the 1 hour, I put my yellow vertical line to let me know that's where I started this markup at. So all I'm looking for is a retest and a trade. Price is either gonna do one or the other. It's either gonna go up, boom, boom, come up here and test that. And then when it get here, it's either gonna break it, retest it, and go to the next zone. Or when it get here, it can reject, retest, and come back down to the zone. So that's scenario one. That's scenario one right there. We're gonna get our brush back out. And we're gonna make this one green. Oil price is gonna come down here. We're gonna make a move, something like this. Gonna come test this, and it's either gonna reject it and come back up to test that zone up there, or it's gonna break it, come back up here, test, and drop down. And we just looking for 20 pips out either move. That simple. It's that simple. That very simple strategy right there will make you a lot of money. And that's it. And that's just very simple, basic stuff right there. Break, retest, trade. You would set your stop loss. Of course, like say for example, let me get my horizontal brain. Say for example, if it was to go up and break, if it was to break above here, I want to set my stop loss. I mean, say if it was a retest and go down, I'm gonna set. Say if it was to go up here and break, I would put my stop loss above this zone. Vice versa, if it was to go up, I will put it below that zone, wherever that wick is at. So, like for example, I'm gonna go over here with it. Say right here, if I was to take that sell, I would have put my stop loss above this high right here, because it would have had to break this zone, and then it would have to come test this high over here to my left right here. And that makes sense to you. And then let me see, like right here, say on this candle right here, if I would have entered this buy, or let's say down here somewhere. All right, perfect. Right here, this buy right here. I would have put the stop loss right here on the where this wick is at right there. You see where this red wick is at? I'd have put my stop loss right there and take profit 20 pips. And then you can also twin trade. So if you new, just go for 20 pips and that's it. But say for example, you might have moves like this to where say you entered about here after rejected, you entered about here. So 20 pips would have just been, boom, 20 pips would have been right here. So boom, once you would have hit your 20 pips, boom, you're out the market. But then you could have had a second position running at the same entry to where you could have just let it run and you would have actually ended up catching this whole move. Or you could have took profit with anywhere within here, whatever made you whatever you felt comfortable with, because each candlestick represents an hour. So you would have made, let me see, we enter right here. Let me leave this up there. So that's 57 pips. So that would have eventually been like a what? A 77 pip move, because your first position, you would have took profit at that 20 pips, and then you had another position running where you would have caught that whole 57 pips. You see what I'm saying? All right, so now if anybody got any questions, don't hesitate to unmute yourself. Ask whatever questions you have. Market open up in 30 minutes. And then see what I know, what I'm just learning about AUD, USD. I never traded this pair before, but I've learned that gold runs very closely with this pair. So meaning if gold go up, this pair go down, go up. If gold move down, this pair move down. So I added this to my watch list over here. And I'm just gonna organize my little watch list over here, pairs that I trade. But this right here is the it's another little gem a lot of people don't even know about. Is like the DXY, which is the dollar currency index. And this is the US dollar. It's a chart of the US dollar compared to other, they want to say like 9 currencies, as far as like the euro, the yen, it's all of them comprised together compared to US dollar. So it's showing you the strength of the US dollar against every other currency pair. And you can use this when you trade in any US dollar pair. For example, in this section right here. Let me see, this was back what? This is June. This is May 26, 2020. So May 26th. So for May 26th, hold on. Yeah, the lowest right there. I'm gonna zoom out more so you can really see it, but for this example right here, I'm gonna do this. All right, so for May 20, let me see, it's May 25th. I want to write on the candle. Yeah, there we go. Damn it. Come on, man. All right. So from May 26th to August 31st, you can see the US dollar was weak as hell, right? So we're gonna go over here to, now remember that's May 26th to August 31st. May 26th to August 31st. So let's go over here to the AUD USD, the one we just mocked up. And let's find that date. Man. But you can already see just looking at the chart because we just mocked this up. So we know we was in a bullish market. Let's find the exact date on. It's time to what we were talking about earlier. Hold on, let me get that vertical line. It's like, man, once you really dive into this trading, man, you really understand money a whole lot different. You look at money a whole lot different. Cause look, remember we were talking about the engulfing candles, right? Look at this, May 26th. What we got? A beautiful engulfing candle. And then from what, May 26th to August 31st, right? So from right here to right here. Look how beautiful this shit is. Cause what we got right here. All right, so look, from right here, from May 26th to August 31st, you see on the right here on the DXY, straight sales, but you go to AUD USD, that's the Australian dollar versus the US dollar, you see it's straight buys at that point. So you can always use the DXY as extra confirmation when you trading any US dollar pair. And the DXY and gold run opposite of each other as well, because when the DXY is low, gold going up. When the DXY is weak, gold is strong, because gold is a safe haven uh, currency. So you got to know that when things going on with the stock market, the economy not doing well, that's when people invest their money in gold when they're not quite sure what's going on, because they know gold is a commodity that's gonna always hold value when the US dollar weak. And just slight stuff like that. Without trading, I would have never known. I would have never even cared to know about none of that stuff. But then you get to really see how the country work and how everything running. If you follow me on social media, you see I've been talking about this crash was about to happen. And watch this COVID shutdown, the stock market about to have a Black Friday sale. So I'm looking for shorts coming up on this. Matter of fact, let's go look at it right quick. Let's go look at the US 30. And if you know US 30 is that change your account. I mean change your life. Literally, like you master this pair right here, but you would never have money problems in your life. I want to say this is the most volatile pair that you can trade next to like cryptocurrency. I'm gonna do a quick mock-up on US 30 right fast before we time out. I got 3 minutes left. All right, boom. So I'm gonna do a speed run. Boom, line chart, mark up our zones, zoom out a little bit, mark up our zones. Obviously, we got a high right here, boom, resistance. I'm gonna stop right here for the sake of time. And by the time price get down there, we'd have went through some shit is on. Damn, I marked the daily zones instead of the 4 hour zones. But we're gonna rock with that for the time being. And I'm gonna give you my exact outlook on this thing here. Alright, so it's gonna open up Sunday. So we right here, put our vertical line at what day we what hour we on. So we marking it up right here. Check out 1 minute left. Alright, price gonna do. I anticipate price going up to this zone, boom, and rejecting. But it could break it, test, and go up, or it's gonna on this test, it's gonna come down. And then if it come down, we wait on the retest to take that trade. Or it could just, let me change the color. It's gonna cut off. But if you're not in my group chat and I send you this video, this is just an example of what we do over here at D2IFX. Definitely tap in with me. If you are in the group chat, I'm gonna post these mock-ups in the group chat, in the Facebook group chat. So I'm gonna drop for all these pairs right here. I'm gonna drop what I'm looking at for the rest of the week for all these pairs right here. Man, y'all be blessed. I'll speak a prosperous trading week over each and every one of you. And let's get this fucking money, man. Let's get this fucking money, man. Let's break these generations.